Hello, I'm Austin Wilson, Director of Investments at Hixon Zuercher Capital Management.
And I am Chase, Associate Wealth Advisor here at Hixon Zuercher Capital Management. We're here to give you market and economic outlook for the month of April, looking back at March. So, Austin, why don't you get us started here?
All right, so buckle up.
Yeah.
It's been a little bumpy ride.
It has been.
So markets continued their Q1 struggle. So it's been a struggle throughout the first quarter, especially compared to the last really fantastic couple years of returns that we've had. So it feels probably worse than it even is, even though it has obviously been pretty bad. We're going to talk about that. But yeah, March, large cap U.S. stocks across the board down 3 to 6%. Entering the first technical correction, that'd be 10% drop from all-time highs, really that we've seen in some time. U.S. mid and small cap companies down 3 to 4%. Stocks outside the U.S., though, actually faring significantly better than stocks inside the U.S., hovering around the break-even mark along with the bond market. So global diversification is certainly paying off in times like these. But that's kind of where we were here in March, which it's a pretty rough quarter, but overall, yeah. If you're globally diversified, you feel a little bit less than just large cap U.S. stock.
Sure, absolutely. But as far as why markets have reacted the way that they have, markets, especially through 2025, have largely been trading on the expectation that tariffs will be imposed from the U.S. to other countries' imports into the U.S. at some point. Now, the specifics on that have been largely debated and negotiated and things of that nature. But leading up, especially to the first quarter of the year, most of those discussions were there weren't specific numbers yet. But what we do know, on April 2nd, which was just a day or two ago as of the time of this recording, President Trump did announce sweeping tariffs under the reciprocal tariff policy, aiming to reduce trade imbalances and promote U.S. manufacturing. So key measures include a universal 10% tariff on all imports, including those countries that are only inhabited by penguins. I don't know if you know.
I know,
about
I've
that.
seen some of those things, or it's a military base that we have a base on, and that's it.
Yeah, exactly. But I will say the penguins started it first.
Okay, that's right.
The penguins are imposing tariffs on the U.S.
Hey, if they're going to do it, we're going to do it.
Exactly. Those penguins are tough to negotiate with, So in turn, higher tariffs there have been imposed on specific countries such as China, the EU, Japan, countries like that. And there's especially a 25% tariff on all internationally made automobiles as well.
So yeah, as Chase mentioned, April 2nd was when this got announced. 4 o'clock after the market hours, of course. We decided to wait till that.
As always.
In the Rose Garden, let's just say that initially, markets started looking okay after he started announcing this until the specifics came out.
Yeah.
And then the specifics came out and markets seemed to take that with some uncertainty, some unfavorable response. Markets sold off very sharply following that announcement, really because the proposed tariff measures were worse than people would have expected, right? Sure. And what this does is it adds some uncertainty for what other countries are going to do in response to that. So we're talking about reciprocal tariffs, like they're tariffing us, so we're going to tariff them. Well, what if we tariff them and then they tariff us more? Are we going to tariff them more? And the uncertainty around that could really escalate into more of a trade war instead of just this tariff discussion we're having right now. President Trump has said that if some country wants to come to him with a fantastic trade offer, he'll listen to it.
Yeah.
But it seems as of right now that there's not a lot of movement downward in those tariff rates. So markets have been especially choppy following that announcement. In fact, selling off, 2, 3, 4, 5% a day in the couple days following.
Yeah, which is crazy numbers. I mean, I know the S&P specifically, the day following those announcements,
it's like 4.8%.
Yeah, worst day since March of 2020. Now, that might lead you to think, is this another COVID drop? But as you might know, there are very significant differences between today and 2020. So
yeah, we're not shutting down an economy. We're just changing the way the global trade works.
Exactly, which comes with some shifts.
Yep. Growing pains, changing pains. Yeah.
Yep, absolutely. But in lighter news, we do have our Florida news story of the month. So a pretty interesting story this month.
All right, bring it.
A man posing as the assistant to professional athlete, an NBA player specifically, I'm not going to name names, went into a Tiffany & Co. jewelry store looking to make a purchase for said NBA player. And obviously, you know, if you're an NBA player, you make a lot of money, you get access to areas that most normal people don't get access to.
The back room.
The back room. So they treated this man, showed him the most high dollar, luxurious jewelry pieces that they have. He proceeded to steal 2 pairs, I believe they were earrings. Yeah, diamond earrings.
Oh,
and
bling,
fled
bling.
the scene. Fled the scene.
Okay,
Obviously,
yeah.
this man is not actually the NBA player's assistant. So he fled the scene, was ultimately caught by authorities, and decided to swallow these earrings.
Sounds very painful.
The earrings themselves, guess the value. I'm looking over my sheet here. Guess the value of these 2 earrings.
$100,000.
$800,000. And he swallowed them.
Wow.
So that
I bet they lost their value after that.
His net worth increased really quickly though. And so obviously, you know, I'm sure he tried to hold that number 2 in for quite some time.
Yeah.
But he was being monitored, if you know what I mean, and
Yep.
ultimately got the earrings back one way or another. But yeah, so he was definitely arrested for that.
Only in Florida.
Only in Florida.
Well,
I mean, not only are people in Florida crazy, but the police authorities are as well. You got to literally look through someone's
I know I'm not into that.
fecal matter for a week and try to get some diamond earrings.
It's not good. I'm not gonna. Yeah. All right. Well, back in real news. That was real news.
It
but
was real news.
back in financial market news.
Yeah.
You may ask, Austin, where does the market go from here? And the great answer that I'm going to have for you is, I don't know. I wish I knew. Anyone who says they know is smoking crack, right? There's no way to know where things go from here. What we do know is that volatility likely to stick around for a while. Like, there's a lot of balls in the air, a lot of different things going on, different countries negotiating, and it's not just the U.S. and one other country like it was in Trade War number 1 in 2018.
Yeah.
This is the U.S. and all global trading partners, really. So that is super interesting and unique, but these tariff tensions are certainly continuing to rattle investors. So right now, bonds, international stocks actually faring better than U.S. stocks, especially growthier stocks here in the U.S., but that's on the back of decades of outperformance for U.S. stocks, and especially those larger, growthier companies. So it's really not abnormal for these shifts to take some time to work out. But that's kind of what's working right now. I would continue to expect volatility to be elevated going forward. What this also does is it puts the Federal Reserve kind of back in the spotlight because they're watching all this play out. It's a lot of uncertainty, and they're saying, well, we don't know the exact impact this is going to have on the economy. We know we have models that could anticipate what it could be, but we don't know that for sure until it happens.
Yeah.
And the Fed always uses pretty lagging data when they're making these decisions. They're typically a little bit later to the party on making changes. So as of right now, they're not really expected to do anything right away. Some people think they might, but it doesn't seem like they're going to step in and cut rates to stimulate growth and ease uncertainty and fix the markets overnight, right?
Yeah.
It doesn't seem like that's going to be the case. However, as this plays out, as actual figures come in throughout the rest of the year, the Fed's obviously going to be watching this. We're still expecting a couple, 2, 3, 4 rate cuts between now and the end of the year, but they're going to be looking at concrete data to see what they're actually going to do. And as we're sitting here on jobs report day, jobs report actually came in adding more jobs than anticipated the last month. Unemployment did tick up 1/10, but that's still pretty low historically. But there was a lower revision to the one before. So the Fed's looking at a lot of moving parts here, and I think that that's something that we're going to be watching going forward. And another key variable obviously continues to be corporate earnings. Those start rolling in here pretty soon. Here's what I expect. I expect the actual numbers for Q1 to come in okay, but I expect guidance to either be pulled or not good.
Sure.
Just because companies don't know what things are going to look like. They don't know what the supply chains are going to look like or what the impact of their earnings for the rest of the year are going to be, because all of these trade imbalance discussions and tariff discussions are changing every single day. So I anticipate corporate earnings to probably be okay by themselves, but the guidance to be what people are going to be watching, and that could introduce even more volatility. So that's kind of where we are.
Yeah. Now that does sound quite bearish.
It does sound quite there.
It does, yeah. But what we want to remind people is oftentimes when things start looking gloom and doom, that typically is, historically speaking, a period of time where a lot of opportunities are out there, right? So a lot of, for example, sentiment is pretty low right now, which is expected after such, data has been made public recently. But when sentiment is low, historically speaking, that's actually shown to be a very good opportunity for the markets moving forward. So there's definitely concerning signs out there, but surely optimism as well moving forward. And so on that thought, for clients of our firm, we have stress tested retirement plans during our relationships. We have, built these portfolios to hedge against days like we've experienced recently. And so with that being said, we've done a lot of the work ahead of time to really prepare for things like this. We hope that the concerns, while they might certainly be there, we hope you sleep well at night knowing that, your investments are being managed properly in wake of all of these events. And then for those of you who are listening that are not clients, certainly you don't want to make any irrational decisions at this point in response to market events. You never want to do that.
This is not a time to just go to cash and sell everything.
Correct.
Just because you feel like it.
Correct.
That would be an unwise thing. There may be other reasons to do that, and that's not what we're talking about here. But if you are freaked out by what you're seeing on TV, this could be a very bad thing to do for your long-term financial plan if you were to just get out of the market because there's a lot of uncertainty.
Absolutely. Yeah. Warren Buffett coined the term, be fearful when others are greedy and greedy when others are fearful, right? Yeah. So that goes along with that sentiment being low, being a good opportunity moving forward. So certainly if you have any concerns about your plan, feel free to give us a call here at 419-425-2400 or email us at hello@HC Capital. That's all we have for you guys today. Until next time, I'm Chase.
I'm Austin, and stay calm, stay invested, and hopefully we'll catch up with better news next month.
All right.
Have a good one.
Guys.
Bye.